Stop.
Like either you enter a buy trade and it hits your take profit, or you enter a sell trade and it hits your take profit. Like those are the only two options. Now, what we want to do is we want to increase our chances of having a successful trade. Now, how do we do that? It's by adding different layers. So what I'm doing is I'm adding the range bars as the main layer. So for example, let's say I'm just throwing numbers out here, but let's say our accuracy goes from 50% chance to 60% when using the range bars, because we're waiting for the trend reversal. So it goes to 60%. Now, let's say we use the PSAR as an additional confirmation. Now, instead of 60%, we might be at 62%. And then we'll look at the RSI. Now, let's go over the RSI. So it has two levels. So there's the 70 level at the top for the RSI. Now, what that means is there's been too much buying going on. The market is overbought when we get close to, or we cross the 70 mark on the RSI. Now, at that point, I'd be looking at a reversal, which means, most likely we're going to start to come back down again. Now, on the other end of it, at the bottom, we have the level 30 for RSI. Now, if we get close to or cross below 30, that means that the market is oversold. That means too much selling has happened and we've gone down too much. Most likely, we'd be looking at a reversal from there. So we'd be looking for a long position or a buy trade because, we've gone down too much and we're going to start to come back up. So what I would do is, I would first of all look at the range bars, then use the PSAR as a confirmation, and then use the RSI to see what's really happening in the market.